I think broadly speaking, when you look at the market, there's really two ways to do it. There is what we call an integrated referral model, where software platforms integrate into some technology stack, and then they refer their merchants over to a payments processor who's going to handle all of the sales, all the billing, all the customer service. So there's really no industry that's immune these days from fraud. What we do to try to make a really good balance is to be smarter about it than the other payments providers. Service is one of those areas that's not talked about very often, but in my almost 20 years of experience doing payments, is actually the most important thing that should be talked about the most. Because at the end of the day, it's really important to have a payments partner like Rainforrest that is not only providing great service, I dare even say fanatical about service, but is being proactive about it.
Today, my guest is Joshua Silver, the CEO of Rainforrest. Rainforrest is the payment provider designed specifically for software platforms. In this conversation, we talked about many interesting topics related to payments for platforms. What are the different options that platforms can choose to enable payments? Who is managed the risk and who owns the financial risk when it comes to the payments? How we can improve buyer and seller experience on the platforms from the payments perspective. And of course, as usual, you got actionable insights how to improve your payments performance. If you represent the payment platform or just interested about payments, this episode is for you. With this, please welcome Joshua Silver. Hi, Joshua. Thank you so much for joining Payments FM.
Thanks for having me. Really great to be on the show.
Let's start maybe with a very basic question. Let's say if someone owns the software platform, like a scheduling software for like plumbers or similar, and they think it will be great to add payments capabilities to their platform, right? So the service providers, they can not only utilize platform for scheduling and for billing, but also to accept payments. What are the options that exist today they can utilize to provide the payment service?
Yeah, absolutely. Happy to dive into that. You know, I'm the founder of Rainforrest, and we provide embedded payments processing services for software platforms specifically to enable that use case of paying the plumbers. I think broadly speaking, when you look at the market, there's really two ways to do it. There is what we call an integrated referral model, where software platforms integrate into some technology stack, and then they refer their merchants over to a payments processor who's going to handle all of the sales, all the billing, all the customer service. That's kind of the first model, this integrated referral model. And then there's a second model, which is the embedded payments model. And that's where the software platform is partnering with a vendor like Rainforest to offer a payments product themselves. And they're handling all of the sales, the service, the billing. It's fully embedded and fully native. And I think if you go back about 15 years or so, integrated referral models was really all that existed. And you had a lot of banks and ISOs, which are sales organizations for banks, that were pitching payments. And you still have a lot of platforms that are using these older referral models. But the downside, of course, is that the software platform is referring their very valuable customer to a third party. And so I'd encourage, whether you're using Rainforest or any other vendor, make sure you're going to an embedded model. That's the way to the future. That's what we're seeing the most innovative companies doing. The kind of the telltale sign is, does the merchant even know that they're signing up with the payments company, or do they think they're signing up with the software company who has a payments offering? You definitely want it to be the latter. That is the exact model that Rainforest would offer to software platforms.
Hi, if you're interested in the payments content, please subscribe to Payments FM on any platform you like. We're publishing on YouTube, Spotify, Apple Podcasts, and other platforms. But even better, you can go to payments.fm and subscribe to our newsletter, just to be sure you're not missing any other episodes. Payments.fm and subscribe to the newsletter. It's maybe from these ideas that's like slightly outdated, but as the software platform, I want to provide payments between buyers and sellers.
Hmm.
So maybe there is a chance that I'll need some kind of license because I will be kind of like
Yeah.
in the middle of the transaction, right? Or like taking the funds. Is this the case in the new realities?
So today, most of the payment volume that's going through software platforms is actually going through what's called a payment facilitator, or PayFac for short. And that is one of, there's about 300, 250 to 300 in the US,
Mhm.
companies that are licensed by the card brands to provide payment services to these end merchants. There was this notion going around about, it's probably been 5, 6, 7 years ago, that every vertical SaaS company was going to be a payment facilitator. And that was going to be the wave of the future. As we've progressed through the last number of years, we've all, as an industry, kind of realized that's not the case. It's really hard to become a payment facilitator. You have to go not
Okay.
only and get licensing from the card brands and registrations, you have to go find sponsor banks, you have to run your own compliance programs, you have to go be PCI level one. There's a litany of things you have to do. It's a really hard, heavy lift to go be a payment facilitator, which is kind of akin to that licensing requirement, if you will. And so we've seen very, very few software companies, other than the absolute largest of software companies, people who are doing multiple billions of dollars per year, go pursue being a PayFac. Nearly everyone else, whether you're doing 5 million a year, 50 million, 500 million, or even 5 billion, all of these software platforms are partnering with PayFac as a service, like a Rainforest or like a Stripe Connect, to achieve this, rather than having to go get licensed themselves.
Yeah. So just to double check, the Rainforest is the payment facilitator, right? And that's what a software provider, like software platforms, can use to provide payments.
The way to think about it is Rainforest has gone and done all the heavy lifting. We handle all the risk, the compliance, the money movement, the relationships with the banks, with the card networks, so on and so forth. We handle all that nitty gritty payments, minutia, so that the software platform
Mhm.
doesn't. And we essentially rent out or license our capabilities to them. And that's why we call it PayFac as a service, because we are the registered PayFac with the card brands. You can go on Visa or MasterCard's website, you'll see Rainforest listed there. And any one of our clients, they don't have to get registered because they're using kind of falling under our license. But the beauty is that the end merchant, their client, still thinks it's them providing the payments, because we do it in a fully white labeled way.
Let's maybe talk a little bit more about these two options, what you mentioned at the beginning, referral model versus embedded model. I think
Mhm.
it's a very interesting choice, and I think a lot of software platforms, they're thinking about these two models and comparing pros and cons. I would imagine that with a referral model, the work on the platform side is significantly less, right? So they're just adding the link or kind of like
Yeah.
referring to the payment provider. And maybe there is some revenue share agreement, so they're getting some sort of benefits from this integration. With the embedded model, I'd imagine there is like significantly more effort and control on the platform side, but benefits are also bigger. So can we talk a little bit more about like what are the obligations and benefits for the software platform with the model that you provide? Yeah.
So, Nick, your intuition is definitely right. With an embedded model, historically, it's been a lot more work, both technically doing
Mhm.
the integration, because not only are you having to handle payment processing, but you're also having to do things like reporting, dealing with deposits, dealing with merchant onboarding, all these other functionality
Yeah.
that you don't have to in the referral model. Not only the technology, but you're also having to do the sales, the service, the support. And historically, one of the interesting things we did with Rainforest is we figured out a unique model where we could reduce the level of effort needed for embedded payments almost to the level of a referral model, but still
Mm.
keeping almost all the benefits of the embedded model. So you get to have your cake and eat it too, because lower effort, but higher reward. And the way that we've done that specifically, the secret sauce, if you will, is on the technology side, we've made everything work out of the box with embeddable components. So instead of having to
Mhm.
go build a whole payments report using a bunch of APIs, you can use our report builder. It'll generate code for you. you can drop that into your platform. We have many software platforms that go live with a fully embedded program in less than 2 weeks from contract signature. So it can be very fast using the embedded components. And then on the program management
Yeah.
side, for the sales, the support, the service, we've done a lot of work to really simplify that. And so the software platforms that we work with actually tell us they reduce the support burden by moving to an
Mhm.
embedded model. Because with the referral model, there's two different parties involved. And so if a merchant has a problem, they're still probably going to call their software platform first. Then that software platform
Yeah.
is going to have to reach out to the referral payments partner who may or may not provide good service. With our model, you touch the problem once, if you will, but you're done. And also, we have a lot fewer problems because the payment product just works better. So the support burden actually goes down with embedded payments.
If we're talking about embedded payments, I feel like there are also kind of like different flavors of the embedded payments, if I may,
Sure.
depending on who is controlling the risk, right? Or who's controlling the risk, I would say, the risk on the seller side, on the merchant side.
Mm-hmm.
Let's say if the platform onboarded the fraudulent merchants or merchants who like did not fulfill their like refund obligations, or there could be some other risks. What setup do you prefer or suggest to platforms?
That is probably the number one question that every software platform should be asking their payments partner, but most people don't know enough to ask the question. And really, the question comes down to who bears the risk. If you have losses, if there's fraud, who takes the hit?
Yeah.
And the sad reality is that most payments providers put that right back on the platform, but they don't tell the platform. It may be buried in the contract or said in a very confusing way. They don't make it
Mhm.
clear. And the first time that platforms realize they have a problem is when they get a big bill from the payments provider. I was actually just talking to a software platform founder earlier this week, and they relayed the story to me. They had a payments partner that onboarded a bunch of merchants, let through a bunch of fraudulent merchants. In other words, that payments provider didn't do their job. And then they sent the platform a huge bill for all of the fees. And the founder was kind of confused and said, well, wait a minute. You're providing the onboarding services. You're responsible for not letting bad guys through. You let them through, but I have to bear the brunt of it. And that, unfortunately, is the sad reality today for most payments providers. And so with Rainforest, we went the complete opposite way. We said, first of all, we're going to put risk front and center. It's an uncomfortable topic because no one wants to talk about losses and fraud, but we talk about it in every sales cycle. We take the risk. If we're the ones that are responsible for doing the onboarding and underwriting and making sure that no bad guys get through, we should also be on the hook if there's a problem. Our incentives are aligned now fully as we're doing the work, we are penalized if we do a poor job. And the other model that most payments companies have, they get paid to do the work and there's no forcing function. If they do a bad job, the platform pays. That to me doesn't make any sense.
So basically what you're saying, there is like a hybrid approach, right? So you're working on it together with the platform and basically attacking the fraud and the risks as a team
Yeah,
together.
it's definitely a joint effort, but at the end of the
Mhm.
day, to be really clear, Rainforest owns the risk responsibility. So if there are losses, Rainforest pays
I
for
see.
those losses, not the software platform.
Thank you for clarifying. So in this approach, if you're controlling the risk, do you see that there is a kind of like a demand from some platforms who are saying kind of like, no, because you're controlling the risk, you're probably put the hand put, put the handle like too far to be
Yeah.
safe. And do you see some complaints from platforms who are like, no, our onboarding rate is too low and we want to be in control a little bit more?
Yep. There's an old joke that floats around amongst payments risk professionals, which is basically along the lines of, I can actually have zero losses. I'm one of the only ones out there who can. And of course, the secret is they just don't approve
Yeah,
anyone and don't process any payments, and then you have zero losses. So
I
you're
see.
absolutely right. There's definitely an inverse function and relationship between what you let through and how high your approval rates are, both for merchants and transactions, and what your fraud losses are, right? Those two go
Mhm.
hand in hand. So I think the trick is finding the happy medium. Any payments business is going to have some losses, even in very low risk industries. We have a platform, for example, in the healthcare space, which is traditionally very low risk. We
Hmm.
had a fraud situation with one of their merchants that we had to cover because we take the liability for it. So there's really no industry that's immune these days from fraud. What we do to try to make a really good balance is to be smarter about it than the other payments providers. So what we do is we have a vertical specific risk engine, platform specific risk rules, meaning when we have a software platform that's in the trucking space, their transactions are going to look very different than if we have a platform in the healthcare space or in the nonprofit space. Most
Hmm.
payments companies kind of treat all of those merchants as roughly the same. If one of them has a spike in payment volume one day, that has to be a problem. And that's just not the case because there's seasonality, there's things that could
Yeah.
cause that naturally to occur. We're able
Hmm.
to keep approval rates really high, onboarding rates really high, but fraud rates really low. That's, I think, one of the magic things that Rainforest does. And we do that largely through the use of data. The software platforms provide us with way more data than they would provide, say, Stripe, but that allows us
Hmm.
to make much better decisions, which yields better outcomes for them and for us.
I think just to stay kind of like on the same topic about the platform experience, I actually found you on LinkedIn with it was because one of the posts you wrote that Rainforest was proactively analyzing the data for one of your platforms,
Mhm.
and you proactively identify an integrational issue, and you can send a recommendation to the platform to update something or to send certain parameter in a certain format.
Yep.
I think it's a great example of the great experience from the platform and the merchant perspective. But what do you think in general differentiates the good payment provider from regular payment provider? And what experience do you provide from the payments perspective to platforms?
So the three pillars that I think payment providers should be evaluated on is one, product and technology, two is service, and three is commercials. We oftentimes focus on the final commercials, meaning
Hmm.
who has the cheapest rate.
Yeah.
And I think that's a huge mistake. After that, then it's often, well, who has the most bells and whistles? Service is one of those areas that's not talked about very often, but in my
Mm.
almost 20 years of experience doing payments, is actually the most important thing that should be talked about the most. Because at the end of the day, it's really important to have a payments partner like Rainforest that is not only providing great service, I dare even say fanatical about service, but is being proactive about it. And when we talk about proactive service, we talk about looking at technology integration issues. We keep a close eye on any errors that may
Mhm.
result from the integration and tell people how to fix it. We also look at making sure that the pass-through fees from the card networks and interchange is optimized effectively. We do that on a proactive basis. We also look at how do we help software platforms get the most adoption, meaning if you're a platform for plumbers, how do we make sure that the highest percent of plumbers sign up for the service? And we're proactive about all of that. We have really experienced platform success managers that are assigned to every platform to help them walk them through
Okay.
that journey. And payments is complex. It's way more than a here's our API docs, go integrate and good luck. That's a really good way to have a huge failure in your payments program, as opposed to having a strategic program management partner that is someone like Rainforest, where we do all that
Mhm.
service. So service, service, service. That's what everybody should be talking about in payments.
Let's maybe switch gears a little bit and let's talk about the buyers and the sellers experience.
Okay.
So, and from the perspective of the software platform, right? If we'll take my example, that there is a platform for plumbers to schedule the work, and
Mm-hmm.
when the plumber completed the work, what's happening today, I believe, in most of the cases, that there are already some established payment rails that are available in the United States to pay with Zelle, with Cash App, Venmo, Apple Pay Cash. There are a
Yep.
lot of them, and most of
Yep.
them are or free or very cheap
Mm-hmm.
or affordable instant payments.
Yep. Yep.
When they're paying with a platform, you're not only paying for like credit card processing fee, right? There will be some fee associated with that, but also the timing of the transaction is not instant, right? In a lot of cases. So when you generate invoice with the platforms, it usually takes some time for payout to happen. What's your recommendation for software platforms to prioritize their internal payment solution and kind of to push and promote their payment solution comparing to payments outside of the platform?
That's a great question. I think we look a lot at what adoption metrics look like. So in the case of the
Mhm.
plumber, how many, and even today, a lot of it's not Venmo or Zelle or other electronic means. A lot of it's still happening through paper check or even cash.
Right.
There's a lot of work that needs to be done in the field services industry, for example, in
Hmm.
helping move that industry to more electronification. And I personally believe that more options are better. Some people are going to prefer Zelle or Venmo, others might want PayPal, others may just want to pay with a credit or debit card. So I think having lots of options is important. What we've tried to do at Rainforest to help with that is to make them all standard as part of the platform. I've seen a lot of software companies that will go integrate with one vendor for ACH and bank rails, and another vendor for credit card, and another vendor for other payment methods.
Hmm.
And what you see is the more payment types that you add, the harder it is to manage, the more complex the integration is, the harder it is commercially to manage. It's really pretty hard to do that. When you partner with someone like a Rainforest that has all of those options out of the box, you integrate with Rainforest once and you get access to all these different rails. And by the way, as we add new rails, you automatically can get access to those as well. We recently
Hmm.
did an integration on the bank rail side with Plaid to be able to do some validation around bank accounts. Both the account is good, but also balances. Our software platforms have to do almost no work to be able to take advantage of that. Going with a payments partner who's constantly innovating and who has this mentality of, we'll take the complexity away and give you the simple interface into us. We'll manage the one-to-many complexity in the back end. Super important.
Is there anything you think from the sellers slash service provider perspectives for them to also to be onboarded on the platform and enable payments? I heard that like faster payouts, right, can be like a interesting feature or can be kind of like a financing for their payouts. Is there anything on that side you would recommend to platforms to kind of like motivate their their users to use payments more?
So I think number one is user experience, making sure that it's frictionless for the consumer who's making the payment. It's got to be easy. If it's too hard, they're going to pay in a different way. They may like revert back to check or things like that. The second thing is offering different options. You brought up like financing. Many times service jobs are offered with financing terms. Having it fully
Mhm.
integrated so the end user or consumer can make a choice at the time of purchase not only helps with electronification, but many of the merchants tell us it actually improves their revenue because now instead of having to save up months and months for a new air conditioning unit, for example, you could finance
Mhm.
it, get the work done now. The service provider gets most of their money, and then some financing providers making a little bit of money for facilitating a faster payment there. It really can be a win-win for everybody. The consumer gets their air conditioning. We have a payments company making some money, and that service provider
Yeah.
can increase their revenue.
Let's talk a little bit about the rainforest itself. So when you look at the market of the payment platforms who offer their solution for platforms, right? There are some certain players on the market already, like you mentioned Stripe, and there are like plenty of others. I think in reality, like every big player provides some sort of solution for platforms or marketplaces. How do you see Rainforest is playing on this market, which some can consider like as already crowded and established? I heard that like Stripe, they have like hundreds of thousands of customers using Connect. So how do you see competing with these players, and how do you distinguish themselves from them?
Yeah, it's a great point. I talk to investors a lot about this. They want to know, well,
Yeah.
how are you different? How are you going to compete?
Hmm.
One is that in the US, at least, and we'll focus there for now, 90% of the payment volume in the US still goes through legacy financial services channels, primarily banks and legacy processors.
Hmm.
90%. As big as Stripe is, and as an amazing growth story as they are, they're still only about 2 or 3% market share in the US. There could be 50 companies the size of Stripe before we've exhausted the market. And by the way, the market's growing pretty considerably year over year. Undoubtedly, Rainforest and others will be one of those 50 that's taking some market share. But this is not a zero-sum game. We can win in this market, so can Stripe. We can have a venture scale outcome, and so can many of our competitors, by the way, without
Hmm.
coming even close to capturing the market. It is just a massive, massive market. In terms of how do we win and increase our market share, it comes down to that triad of product and technology, service, and commercials. We have really great product and technology that is purpose built for vertical SaaS companies. And so we win there. We have incredible, phenomenal service. That's the reason why most people buy us. And we have really reasonable commercials. And when I say commercials, I don't just mean what's the actual pricing, which is important, but also, do you have a mechanism to help scale as their volume grows? Does your contract say that the platform owns all of their merchants and that you'll contractually are obligated to export them? Certainly
Hmm.
ours does. So when you look across those three dimensions of that triad, you're in a really good shape and place going with someone like Rainforest. With other companies, you're typically having to make trade-offs. With a lot of the scaled companies, you're not getting great service. You may or may not be getting a decent price. And
Hmm.
depending kind of what vintage they are, if they're a legacy scaled player, then their tech's probably pretty bad. If it's someone like a Stripe or an Adyen that's newer, the technology is not too bad, but that service almost always is suffering.
Let's talk about the payments industry in general and payments for like from the merchant perspective. Right now, what do you think maybe the most overlooked the problem that merchants experience when starting to accept payments?
Hard to pinpoint just one, but I think making sure
Hmm.
that they have good protection in place in case of any fraud is really important. We're
Hmm.
seeing a lot of new types of novel attacks with the use of AI. You have a lot of people that are impersonating other people, that are stealing identities. It's making it really hard for risk professionals to catch the bad guys because of the pace of innovation
Hmm.
and low cost of AI. We're going into a different era now than ever before. So you need to make sure that you're partnered with someone who's going to help you out on the fraud side. And then I think the second is making sure that the user experience is good. If you're a seller or a merchant, you
Hmm.
need to make sure that the end experience for your consumers is great. And I'll give you the perfect example. I recently did some renovations on my house and had some contractors come in. And on one end of the spectrum, you had contractors that were completely paper-based. They had clipboards with them. They were handwriting quotes. They really preferred check or cash. On the complete other end of the spectrum, you had fully digital operations where they brought iPads and tablets in. They filled out the quote. They would send it immediately over text to you so you could review it on your
Hmm.
phone alongside them, and accepted Apple Pay. And I was able to pay in 5 seconds. I'm much more likely, and I think as the next generations come up, they're much more likely to partner someone who's digital first. And you want to make sure
Yeah.
your payments experience matches that as well.
When we look a little bit broader, maybe just to the whole industry or where you see the industry is moving right now, what do you think is the biggest problem with payments right now that we are experiencing in the payments? What blocks us from kind of like going to the safe, cheap, quick, convenient of payments for everyone?
I hate to be repetitive, but that risk and fraud is just so key. We've talked a lot as an industry about faster payments, whether
Hmm.
it's FedNow, which is this government solution for real-time payments. The legacy payment systems, the ACH networks, the credit card networks, a lot of the cost in these transactions are not actually for the underlying rail. Both an ACH and the underlying transaction of a card or
Mhm.
debit card is actually not that expensive. What is very expensive is the risk management around it. Take the example of a wire payment, right? A wire payment is real time. You can go into a bank, almost any bank, and do a wire payment, and you're going to pay typically somewhere between $30 and $50 for that. The actual wire itself from the Federal Reserve costs way less than a dollar. It's measured in cents, but yet you're paying $30 to $50 for it. Why is that? Well, it's because a wire is non-reversible, it's final,
Mhm.
it's one way, and the banks have to both employ a lot of process and procedure and technology to prevent fraud from happening. And then also they have
Yeah.
to build in reserves for when losses do occur to cover that. So the fraud and risk is what adds a lot of the friction and the time to it.